It's our belief that once we start seeing real estate assets starting to become liquid to some degree, we will get a self-sustaining effect, right? Because if you are an investor, you can invest into two otherwise identical real estate projects.
Welcome to the Deal Flow podcast. Today, we're excited to have Claus with us, CEO of DigiShares. Claus is a leading figure in the field of tokenization and artificial intelligence with a career that spans over 2 decades in technology and entrepreneurship. At DigiShares, he spearheads the development of innovative solutions for tokenization of real-world assets, focusing on transforming the way we interact with real estate, infrastructure, and other significant physical assets through blockchain technology. His expertise extends across multiple sectors, having founded and led various ventures before his tenure at DigiShares, each contributing to his deep understanding of the digital transformation of asset management. Claus, thank you for taking the time to be with us today.
Thank you very much for inviting me. It's a great pleasure.
It's going to be a fun conversation. I'm looking forward to hearing more about your journey. So I know obviously I gave a little bit of a background, but if you could in your own words introduce yourself and share your journey, your professional journey, and what led you to becoming the CEO of DigiShares.
Yeah, actually I started as a researcher. I have a PhD in computer science. My dream was originally to get into research and sort of do that for my life, but I quickly found that it was pretty boring, and you work a lot on your own, right? You are alone most of the time, and a lot of 95% of the research that is done doesn't really get implemented or used anywhere, right? So it wasn't very satisfying for me. I was hired into HP, then actually worked for HP R&D for a few years after my PhD, and sort of I got wind of how exciting it is to be on the business side. So moved over to that and actually made a spin out of my HP project, which was based on AI. The focus for my PhD was also on AI. So I worked in the AI space for more than 10 years before AI sort of really got popular with ChatGPT and so on. And then about 7-8 years ago, I stopped doing that and started looking at blockchain instead. I invested in Bitcoin back in 2014 and sort of slowly got into the space. And then in around 2016, I decided to really get into it as a kind of career opportunity, developing my skills in blockchain on the business side and the technology side, and basically just doing any kind of sort of startup in the space, right? So we did a couple of we were 3 founders that did a couple of projects, made a couple of pivots, then eventually ended up in real estate tokenization, where we are today, and we've been working on that for the last 6 years.
Excellent. Cool. So this has been your life for the last 6 years. Tell me a little bit about DigiShares and kind of what you guys do at your firm today.
Yeah, we are basically a software company, right? So we sell software for real estate tokenization. We are one of the leading providers. We have close to 200 clients in more than 40 countries. US is our biggest market. Maybe almost 40% of our clients are US based. And US is also the market that we have the biggest focus on. It's actually the easiest regulation for us to operate in. We're getting several licenses. We're setting up an exchange also in the US, real estate.exchange. So we're busy, right? We've seen a lot of growth over the years. We have a product that's mature and very flexible, and speak to a lot of real estate people and help them to optimize their business.
Sure. Yeah. Maybe tell me a little bit more about the software that you guys develop. Is that a particular type of software? Is it custom to your client, or kind of just tell me a little bit about how you engage with those clients and what do you do for them?
Yes, we are software as a service business. We have a platform that is highly customizable and can be configured in many different ways based on the customer's requirements. But it's a self-service model, right? So we provide the platform, we train, guide the user, the customer, right, and how to use it, and then they're on their own. So it's relatively easy to use it. It has sort of a relatively high degree of usability, right? So they can sort of define their own assets, their own development projects or properties that they want to tokenize, click a button, mint the tokens, offer them for sale, pay out dividends or distributions over time, manage investors investor onboarding, deal presentation, trading, and so forth. It's relatively easy to use, and if it's not, then we will help.
Sure. Okay. And so if I'm a sponsor of real estate projects, and I'm traditionally going through a syndication model or a fund-based model, why would someone like that want to then, instead of doing that, go to the tokenization route? What advantages, or maybe even the advantages and the disadvantages of doing tokenization versus securitization?
I would say there really are no disadvantages, because you can do exactly the same, right? So you can use it as a tool without tokenization. You don't have to mint the tokens, right? So you can use it just to manage your existing traditional deal as you do it today, and then just use it as a kind of deal presentation system, investor management system, and so on, basically to optimize, and digitize, and automate, right? So that's sort of the starting point. So we have clients that use it mostly, I would say, to digitize and modernize their existing business and sort of automate investment workflows, onboarding workflows, distribution workflows, and so on. And it's quite good for that. You can do it without tokenization. If you add the tokenization element, you can do more, right? Because then you can also, I would say, more easily fractionalize, reach out to smaller investors, to crypto investors if you want, and you can trade. The trading part isn't really activated unless you have the tokenization part. If the tokenization part is turned on, then you can trade sort of in a peer-to-peer fashion without counterparty risk from wallet to wallet. So of course we realize that not everyone knows how to use a wallet, and wants to do it, right? So for that reason, you can use the system without tokenization, without any crypto adoption or engagement at all, right? But it limits the functionality a little bit.
Sure. So as a kind of a deal management and investor management platform, you guys compete with the Juniper Squares of the world, right? Those types of folks, but they don't have that tokenization capability. So you can provide a better product relative to the legacy solution, but then also this additional capability. So it sounded like, from what you said, what this allows then is someone who invests in a project using the tokenization capabilities could then get liquidity, could trade that security. Can that liquidity be only within the existing investor pool, or can that token be sold to an outside investor, and you can potentially get outside liquidity if you're an investor and you want that, or how does that work, and how does that tie into the securities framework, right? If you're that's a big question. It's also a key question that almost everyone asks us that we speak to. The platform comes with an internal bulletin board, simple trading solution-wide function, where you can trade within the existing group of investors. But even that requires a license to run, because it resembles a real exchange. So there's a cost to that. We have a deal with a broker-dealer that can facilitate the license that is required to run it, but you can then run it at a reasonable price to facilitate internal trading. Of course, that doesn't give any extra liquidity. It doesn't sort of expose the deal to external investors and traders. For that, there are several options, right? So you can list the asset on any security token exchange, crypto exchange in the US that is regulated and licensed to trade securities. You can wait for our forthcoming realestate.exchange in October, where it will also be allowed to trade securities right on a licensed ATS, basically, in the US. So it's fully regulated and licensed under the SEC guidelines, and allows for trading both for retail and accredited investors, for US LLCs or C Corps, right, that are tokenized. Of course, you have to follow restrictions regarding lockup periods and so on Reg Ds and Reg S and what have you, right? But otherwise, it's a fully sort of functional exchange with an order book. Yeah, and so the token, some of the rules that you described, those come back to the legal documents, right?
Yeah.
Are there rules and workflows set up for the legal documents to be followed, right? Like, is it kind of like a no-brainer solution where, hey, here's your documents, here's the lockups, here are the stipulations around how much can be sold, when it can be sold, what approvals and votes have to happen. All that can happen through your platform in a kind of a controlled method.
that's one of the benefits of tokenization, right? That you can automate all that, so you make sure that it happens and it's checked, it is followed anytime, right? So it's actually it uses smart contracts, which are
that was the term I was looking for. I was trying to find
programs, software programs running on the chain, right, that are visible for anyone to see, and they are audited to the nth degree, right? So extremely carefully checked. And they just ensure that you follow regulation. You can't make any mistakes. The lockup period will be followed, right? So, and you can't mix Reg D and Reg S securities. So there's a number of everything in that regard can be coded into the smart contracts, and the system will follow it. So it's much more secure, right, and prevents you against human errors. It is also automated, right? So it reduces the back office costs significantly.
Yeah, and the I just have more questions about this. So like when you're typically doing this through the securities, the old way, right? There is a KYC requirements, things like that. How does that get handled? Particularly when you think about secondary transactions, when you're obviously if you're providing liquidity within the same pool, you've done KYC for your existing pool of investors. When you start thinking about external exchanges or your exchange that'll be coming out in October, how do you guys handle KYC and other reporting requirements like that to ensure that, and even just cross-border flows, right? Like if you have capital from non-US, if this is a US sponsor, can you maybe speak to those issues?
Yeah, we follow the same KYC regulation as anyone else, right? So we have KYC providers integrated into the platform. We have a few that you can choose between, right? They have different pricing models and so on. So KYC is definitely required, and it's sort of baked into the system, and it's automated, right? So it's done fully automated when the investor is onboarded. They will go through the KYC process. The sponsor, the administrator doesn't have to do anything, right? It's fully automated, and the investor will get access if they can pass KYC. Otherwise, they will not get access, right? So it's fully automated, both on the primary issuance and the secondary trading side.
Sure. Yeah, that's great. So let me go to a practical application for a second. Maybe could you walk us through an example of a client that's come on board, or kind of what did that look like? And maybe someone who's used the full capabilities, right? Like what did that look like, just to get a kind of a feel for it?
Yeah, we have a client called Liquidity that's tokenized, I think 38 properties by now. They are an example of, I would say, extreme fractionalization, which is not necessarily what everyone wants to do, right? So they've fractionalized down to $100 US. So they basically tokenize debt in this case in the properties. They use it to raise enough funding to buy an apartment or a property. They renovate it, increase the rent. They pay out, I think, 90% of the rent, the rental income to the investors. They keep the rest for themselves, as well as various fees that they charge as part of the process, right? They use most of the platform. They don't use the trading so much. They use a system based on redemptions, right? Which is actually also quite a good way to get some liquidity. But otherwise, it's a great example. They can fund a project, I think, within an hour or so. They have 100,000 investors on the platform, so it's an example of a crowdfunding usage of the system, which is one extreme. The other extreme would be a company like MarketSpace Capital, Texas, Dallas-based real estate developer that also tokenized a few properties. I think it was a multifamily property called the Spot at Myra Park, and then listed it on exchange. So they got liquidity, right? They did it mostly actually to, I would say, sort of digitize business processes and workflows, reduce administrative costs, and then also gain liquidity for the existing investors.
Mm-hmm. Mm-hmm. Yeah. So that's and so are you mostly seeing people use this to recapitalize existing deals, or are they typically using this to raise capital for new deals, or what happens first typically? Is it
It is the latter, right? So I think we see a lot of startups that are adopting the technology, or a lot of real estate firms where sort of the young generation have taken over. And I think a lot of them want to use it primarily for new projects to begin with, to fundraise, and then sort of make an easier sort of capital stack, right? Maybe they can take 10% in for tokenization, make the rest easier. I think those are the most common use cases.
Yeah. So what's next for DigiShares? So like obviously you guys have created this platform. You guys have a great base of customers. Where do you see the company going over this next year, 5 years, 10 years, depending on how far out in the future you're thinking? Where do you see the company going from here?
1 year in the blockchain industry is like 7 years in the normal industry, so we can't look that far into the future. But I would say a lot of our focus right now is on the exchange. It's hugely complicated to launch an exchange within regulations, right? And to make sure that everything is following SEC guidelines and we are 100% compliant. So also a lot of our focus is on that, I would say, for the next half year. And then we're actually planning to launch in 3 more countries so we can cover globally. So I think we'll be almost completely focused on that for the next year and a half. But of course, we will also continue developing the white label platform to make it easy to do the primary issuance. And the focus is really on usability. Then it's on sort of on-ramp and off-ramp, right? So making it easier for people to use the tokenization functionality without being crypto experts or without having to install a wallet and so on, but just using it maybe from an existing bank account even, or some kind of user-friendly wallet. So that's really what the entire industry is working on, making it so easy that anyone can access the digital assets ecosystem, right? And not without knowing it, really, at the end of the day.
Right, yeah. And I guess that's great. I think that when you think about your exchange that you're going to be launching, is that for just the tokens that will that be widely available to the public? Yes. Anyone can. Yeah. So it won't just be your tokens
nope.
or the client's tokens. It'll be anybody who wants to list on the exchange and trade.
Yes.
And is that I assume that the regulations for exchanges differ from country to country. So is that like almost like a different launch process in each jurisdiction?
Yes.
Okay. And you're starting in the U.S. Is that correct?
Yeah. Yes.
And you said that that's the most lenient regulatory environment.
I didn't say that.
Okay.
But I would say, as long as you embrace securities regulation, then you can tokenize as much as you want, right? But there are a lot of countries where you need a license to tokenize, and then of course it's really difficult to get off the ground. But in the US, actually, the SEC approved security tokens. So basically just the idea of having a security in digital form on the chain back in 2017. So it's been recognized and approved for several years, right? And we have many legal firms in the US that facilitate the process also. So it's 100% compliant. They don't view it as crypto, really. They view it as just more like a digital infrastructure, new digital infrastructure that's more secure, more efficient, more transparent.
Yeah,
which is the right way.
Yeah, and that's I think that's one of the positives. I know that the regulatory environment, at least I only am as a U.S. Citizen, I mostly have a U.S.-centric kind of view, and I know it's been a challenge. My understanding is that it's been a challenge to get clarity from the securities framework of what's going to happen and what's going to be allowed, what's not. Something that might be allowed today may be taken away later, and so you might be building something that you may have to throw away. Has that been you've been doing this for now 6 years? Has that been a challenge, or have you had pretty clear guidance?
We had pretty clear guidance all along, right? And that's because we acknowledge, we accept that we work within the securities framework. All the crypto companies that have problems, that's because they try to facilitate trading or selling of unregistered securities, right? So that's the main issue. If you work with registered securities, then you have no problem at all.
Mm-hmm. Mm-hmm. Talk a little bit about, so after these, you recapitalize an existing deal, or you raise money, and there's some exchange obviously between, the dollars to tokens or whatever currency it's going from. Once that, kind of lists, right? It's gonna trade freely, or it's gonna trade relative to its inherent intrinsic valuation. How is that handled? Is that a pure market, process, or is the sponsor or the person that's are they coming up with a valuation? They have to come up with a third party. How often is that done? Like how do we mark to market effectively the tokens? Or how is that done?
Yeah, it's actually a great question. And something we haven't completely settled on a model yet. I would say. So it's something that sort of we are developing with our clients and our partners, right, and trying to understand what works best for everyone. But the feeling right now is that we do need to use third-party appraisals, right, especially for the exchange, to ensure that the value is trustworthy. And we can get that we can use something called oracles, which is a way to get real-world data right onto the chain in a way that is 100% trustworthy. So there are special regulated licensed parties that can facilitate these oracles and make sure that the data that is sent through them is 100% correct. And then, of course, you'd send appraisal data across to the exchange, and then you would possibly, I think, we're thinking about limiting the trading to maybe minus 10% of the appraised value, right? So that the market forces can't completely control or influence the price, right? But that's not decided yet. We're still working on that detail.
Yeah, it's somewhat similar to I guess you could argue, the problem with closed-end funds, right? You have this gap between intrinsic value of the underlying securities and then the tradable security of the closed-end fund. Usually trades at a discount to those intrinsic value securities, which you could argue is maybe a discount for illiquidity. But in this case, you actually are enhancing liquidity. So you could see theoretically that there'd be a liquidity premium on the value, but you're also a minority interest holder, so you could see a discount for that, which is something you typically see in the securities framework, where you've got a position, but you have no voting rights, you have a minority position, so we're going to come up with a bunch of discounts so that, usually for estate planning purposes, you can argue that this position's worth less, but that's not really the right, framework to think about for, a tradable security. You want to have maybe not minute to minute mark to market, but you want to have some level of mark to market versus today it's just at a market activity, right? At a sale. There's basically no sense of value. Although people will come up with their own values, sponsors will come up with their own values, but they don't necessarily correlate to any rules.
No, that's right.
So that's something that so right now, I guess if someone's using the platform and they're trying to trade, presumably again they're trading amongst themselves mostly.
Yes.
So, are they doing that at par, or are they doing that at cost, or are you giving the sponsors the ability to write up the value of the assets? How is that happening today?
Yeah, the sponsors can basically control it as it is today, right? So we don't see much liquidity, right? So it's relatively low liquidity, but it can be sort of controlled by the sponsor, yeah.
And that's basically the same as it is today with so that's as good as, if not better than the current framework, where you want liquidity, you negotiate directly with the sponsor on a price that everyone can agree to, and usually it's for some sort of hardship. It's not just to trade. So there's usually a discount due to that. There's some sort of emergent need for the cash in the current month or quarter. So very interesting. So you told us a little bit about, let's go back. You had talked a little bit before you went into the blockchain, you were working in AI, and you said you did your PhD in the AI space. I think AI, is it's a kind of a loaded term, right? It means a lot of different things. So, from your perspective, to the extent that you can explain it in plain speak for me, your PhD in AI, what was the nature of that, or what were you working on there?
Yeah, it was an older form of AI, right? So we didn't have the large language models or ChatGPT or deep learning back then, right? So it was a different form of AI where we basically created models of the sort of the decision we wanted to get help with. And then you could again sort of train the model using the data you have available, or you could use it without data, and then you would get some kind of indication, right? So it's called Bayesian networks. If you saw the news about this guy Mike Lynch that went down in his boat recently, called the Bayesian, right? He was one of the big players back then as well. So it's Bayesian. That was his name of his boat. Yeah. So we used it for a lot of things like medical diagnostics, healthcare diagnostics, but also sort of technical diagnostics and troubleshooting and so on. It's still used for that, but it's you can't train it to the same degree as you can with a large language model, right? So obviously that's much better in many, many situations, right, where you have plenty of data available. So I got, when I stopped working, and back then AI wasn't as hot as it was today. It was really, you didn't see any great applications. So I would say it was offered a marginal benefit in most cases, right? So that changed a few years ago with ChatGPT.
For sure. Yeah. I mean, I think I remember that from statistics. That was like it's a formula for that you learn in statistics.
Exactly.
And is the limitation there is that you're very limited to like zeros and ones. There's not a lot of places you can go, right? So, and it's a chain. So but you can't branch too far out, or you get you lose the sense of it. So
it's limited to the model you have built yourself, right? So it's you can't train in an open-ended fashion as you can with ChatGPT and so on.
Right. Yeah. Interesting. So that's interesting. So you have that background, and so you came into blockchain. What made you decide? Like, I don't think we touched on this, that you were kind of bouncing around trying to find the right project with a couple of your founding partners for DigiShares. I guess how did you guys arrive at this idea, at this project, versus other projects that you could have pursued?
Yeah. So initially we started working on a project where we wanted to create like a startup incubator on the chain where people could list their projects and look for participants, and then you would basically get tokenized equity in the new startup project as payment for your contributions, right? So that was sort of our initial idea, but it was just extremely difficult to get off the ground. Selling to startups is never a good idea, right? Because they have no money. So we couldn't get it off the ground, but it allowed us to learn that there was an opportunity and a potential in trying to work on getting securities on the chain, right? Which was a pretty new idea back then, and there wasn't any really good solutions for it. There weren't any good applications, use cases, and so on. But so we thought that we could do something new and unique and innovative in that space. I think there were only maybe 4 or 5 companies globally working in the space back then. So it was pretty new, and it was, of course, legally complicated also, right? It was, I would say, unpopular from the rest of the crypto space because it was securities, right? And you had to do KYC and you whitelist and everything else. You couldn't be anonymous. So it wasn't so much in fashion, but we thought we could do something and still sort of keep some of the ideals of the blockchain space and decentralize to some degree and try to make it more efficient.
Mm-hmm. Mm-hmm. And so I assume that the vision here is that over time, you can, supplant the existing securities framework, right? You can eliminate the well, I guess you still have all of the legal frameworks. You still have to have the PPMs and the operating agreements. All of that structure still exists. This is just something that lays on top of it to create more efficiency. So you're not replacing that as much as you're just creating an efficient layer rather than relying on an analyst and to review the documents every time and make sure that they're using the right Excel model and it doesn't break and when they're doing distributions or what have you. And obviously over time enhancing the liquidity. That feels to me like in the future the big piece that if I could get access to projects all over the world. From my computer, very, very simply with a couple clicks of a button. That seems like a very powerful implementation.
Yeah, I think what the blockchain part adds is really, you could say, efficiency, right? Cost reduction, disintermediation. So there's a lot of parties you can remove. You don't really need to work with a bank or one of the existing exchanges anymore, right? You can do a lot in your own software system from your own computer. You can do it outside those institutions, right? So of course, we can reduce the price, the cost, and increase the efficiency enormously. Then you can do the trading, right? So you can do the trading without counterparty risk directly between 2 parties, which is unique, right? You haven't been able to do that before. The bank or the exchange was really the guaranteeing and removing the counterparty risk. But since you are on the chain, which is trustless, right? You don't have the counterparty risk. So you can trade peer-to-peer and be safe. And the last thing I would say, so liquidity is much easier to create, we believe. And the last thing I would say longer term is that you can very easily use your real estate-backed tokens as collateral for a loan, right? That ecosystem is also developing extremely fast and it's decentralized. So anyone will be able to provide a loan towards some collateralized real estate-backed tokens. So that'll become highly competitive and extremely efficient, right? So within a few minutes, you'll be able to get a loan in that way. So I think the capital efficiency of the real estate space will be increased significantly, and also liquidity of real estate will be increased significantly, right? So now only 1% of global real estate is liquid and tradable, right? So there's a lot that can be done. It's our belief that once we start seeing real estate assets starting to become liquid to some degree, we will get a self-sustaining effect, right? Because if you are an investor, you can invest into two otherwise identical real estate projects. One is liquid, the other one is illiquid. Everyone will prefer to invest into the one that has some degree of liquidity because they can exit. So obviously those projects will be worth more and will be more attractive.
Mm-hmm. It's sort of like you're building, the categories being built, and then once you, but then there's also beyond just being able to have that being collateral for loans. It allows people to express short or long positions in different locations, different types of assets. Hey, I like the Southeast United States, but I don't like California, so I could go long here and short here, and I can take out insurance policies against my own positions to eliminate my certain types of risk. So it allows you to join. It allows real estate to join the rest of the securities market, right? That it's been sort of 50 years behind in a way, right? Yeah. What happened to bonds in the 80s? Were just and you had to take to take the bond and literally curry it to the other person. Now it's been 45 years since then, but you could settle bonds very quickly, and it's obviously a lot of other securities instantly. So getting closer to that sort of thing is going to be a game changer. Yes. Are you guys touching the title process at all, or do you I guess that's another piece of the pie that I feel like is a big racket. We're all in the U.S. paying title insurance to ensure that our titles are clean, where we know what the title's clean, and even if you have a title issue, it's very hard to actually get use the insurance. Yeah. So it's a very high margin business for the people who are in title insurance, but ideally we can put that all on the blockchain. It's all visible. We can eliminate this apparatus, and we can settle transactions much, much faster. That may not be exactly your space, but I wonder if you know much about that or kind of where that sits today.
Yeah, it's a great question, right? So we would actually like, today we have, we would say, an unnecessary step, right? Because we securitize the property first and tokenize the SPV, the shares of the SPV or some kind of debt structure, right? So if we could tokenize the title deed directly, right, we'd skip that, go directly to the source. But it's just legally too complicated to do. It requires integration with the land title registry. We haven't seen anywhere in the world where it's possible today to do it. No one has done it yet, but I think that as the land title registry start sort of digitizing and providing APIs and so on, that it will happen. We're actually working on a collaboration with the land title department in Dubai to possibly do it. They are interested in doing it, right? Because it's also to their benefit, because they get much more precise data. They can track all transactions going on. They get much more rich data. If they want to charge transaction fees, right, it becomes much easier for them. If they can make the market liquid they'll get a lot more transaction fees, right? So it's highly beneficial for them also.
Yeah, and they can influence the market more directly if in any way they want, right? And I think as we think about where the financial centers of the world are going to be in the future, being cutting edge and being willing to try new things is going to be really important. I think that digitizing the title process is a big step in eliminating so much time and expense in each transaction. Many more points than the broker. It's more expensive than the brokerage I know that the brokerage process everyone is really up in arms about and whatnot in the U.S. But the title process, no one spends a lot of time. They got better lobbyists, so no one's talking about that. But really, we should really be looking at that. So I'm glad that someone's working on that. If it's not you guys directly, I think that's being worked on. And there's somewhere in the world there's a model that we can then emulate and take advantage of. So going back to DigiShares, you guys have been around for 6 years. Tell me a little bit about, did you start this company bootstrapped? Are you guys funded, through third parties? Kind of how does your capital structure look like today? And what does that look like?
Yeah, we bootstrapped the first couple of years. Then we've been raising around 2 million a few years ago. And then we've sort of been breaking even, I would say, most of the time, right? Burning some money also. Right now we are raising again, so we're doing a 7.5 million round as a Reg D and a Reg S, right? So accredited investors in the US, any kind of investor outside the US. We're close to signing a term sheet on the 5 million part of it, so will soon be looking for, I think, followers to help us fill the round.
Right. Well, that's I'll keep my fingers crossed for you. Once you get that lead, the rest is all gravy, right? Yeah. Everyone, you get referrals and people just kind of follow on. So, good luck with that. It sounds like you guys have made an enormous amount of progress in these last few years and brought in a lot of customers. So, and it's definitely in a growing space. I think the sky is kind of the limit as it relates to that. So, is there anything else that, as a layman on my end, that I didn't ask you that someone who maybe is more technology forward would typically ask you, or anything else that you want to share about the space or the company that we haven't gone over?
I think we've been quite widely around. I think we have covered pretty much everything. Actually, I can't see anything that we have left out. I think we covered it quite well.
Fair enough. Well, I used to work as a sell-side analyst, so all I did was have conversations like this and just keep coming up with new questions based on the responses. And you've been awesome because you know your stuff, your company in and out, and the space in and out. So Claus, I appreciate your time on the podcast today. If anyone wanted to reach out to you and learn more about your company or about yourself, where can they go to do that?
We are very easy to find. We do a lot of webinars, so you can visit our homepage and sign up for one of our webinars. We have 2 webinars in September, one on tokenization in North America and one about the exchange that we're launching. We also do masterclasses where we travel out and physically sort of meet with people. We did one in Austin a few months ago and earlier in the year in Miami. So we travel around quite often and do those. But then you can also just reach out to our homepage or write me directly on the cs@digishares.io or LinkedIn, for instance.
Okay, great. And if someone wanted to become a client or inquire about being a client, that's also the best way to do that. Okay, great. Well, awesome. Well, thank you, Claus. I appreciate your time. And thank you all for joining the Deal Flow podcast. And we'll see you next week for another interesting conversation with experts in the real estate space.